Good morning. Thanks so much for joining us here at the Network Breakfast. Yes, it's another Tuesday morning, and we're all saying good morning to you YouTubers out there watching our video. And today we're going to talk with Brian Diamond is going to present the importance of building business credit. It's very important. And but before we do that, we're going to introduce ourselves and give you a 1-minute thumbnail about what we do and who we are. Okay. We're going to say good morning first to Chris Walters. Good morning, Chris.
Good morning, ladies and gentlemen. Chris Walters with See-Through Windows. I provide vinyl replacement windows and patio doors and glass block. I cover a territory from Port Clinton to the Pennsylvania border, Cleveland to Canton. I go take a look at every property, and within 24 to 36 hours, I will email you a quote. Right now, we're looking at 4 to 6 weeks to get delivery for windows. So keep that in mind. 330-604-0403.
Great. Thank you, Chris. This is trying times for all manufacturers. And thanks so much for Ray Antonelli showing up. We appreciate it. Thank you, Ray. Let's hear a little bit about you.
Good morning, everyone. Ray Antonelli here. I specialize in reverse mortgages for seniors. It's a very interesting product because a reverse mortgage allows the senior to receive cash from a lender rather than the other way around. You have to be at least 62 years of age or older in order to qualify for a reverse mortgage. And at age 62, you can borrow about half the equity in your property, so the property does not have to be mortgage free. Obviously, if there is a mortgage, we can't give the senior a lot of money, but on the other hand, we can eliminate the mortgage payment altogether. So Ray Antonelli, reverse mortgage specialist, 216-337-7520. Thank you.
Great. Thank you, Ray. Thanks for being here. We're going to say good morning to Mike Bentley. Good morning, Mike. Oh, boy.
Mute.
Oh, boy. Hey, Mike.
Still mute.
Oh, boy. We've done this a few times. You would think that
my apology, my space tab is not releasing my unmute. So my apology to you. Good morning to you. This is Mike Bentley speaking from a local Panera on my way to an appointment this morning. But because of the importance of the network breakfast and the value, I don't miss it. You know, it's like a day without sunshine. But anyway, I'm an insurance professional and I work especially in the area of healthcare, health insurance for the senior market. I work with Medicare beneficiaries, those who are transitioning, retiring early, looking for options other than COBRA. So once again, Mike Bentley from the Brooks and Stafford Company, and we'll see if my space bar to mute me works once again. Thanks again.
okay, great. Thanks, Mike. Thanks for being here. And you're going through the travails of the microphone on and off. But we're happy you're here. And thanks so much, Mike, for joining us, even though you're at a Panera. Appreciate it. That's why you're going through the on and off with the microphone. So now we're going to say good morning to our favorite photographer. That would be Scott Morrison. Good morning, Scott. Thanks so much for being here.
Good morning, everybody. My name is Scott Morrison. My company is Discovery Photo. I am a full-time, full-service photographer, have been for 30 years now. Wow. We do everything from legal, corporate, industrial, architectural. We do a lot of business headshots, modeling portfolios, CEO portraits, a wide gamut of things. And on the weekends, get to crash parties. I'm also very active within the movie industry here in Cleveland. So I get to work on a lot of the feature films that are here and some of the small independent films. My name is Scott Morrison. The company is Discovery Photo, when image counts.
Great. Thank you, Scott. Thanks for being here. It's so exciting to hear when you do a movie or stuff. You know, we can only watch from the sidelines as people like you produce those fabulous movies.
Fun.
Okay. We're going to say good morning. Thanks so much for showing up, Marty Kelbell. Good morning, Marty.
Good morning, everyone. I've been kicked in and out of the meeting a couple of times, and I don't see you guys, but I hear you. But anyways, I'm glad I'm here. I can help you with all your real estate needs, whether you're upsizing, downsizing, right sizing. You want to live in the other side of the country, I can help you with that with referrals. I can help make your offer on your house be attractive to people. I know how to get that done so that you would be the one the seller would want to pick if they're buying a house. I could also help the sellers get their house ready so people would want their house versus other houses. So give me a call at 216-544-4164. Thank you and have a great day.
Great. Thank you, Marty. Thanks for dropping by. We appreciate hearing about your real estate deals. It's great. Thanks. Okay. Now, without further ado, we're going to introduce Brian Diamond and the importance of building business credit. And we're going to give the floor to him. Please pay close attention. Good morning, Brian.
Morning, Tom. Thank you very much. As Tom said, my name is Brian Diamond with Springboard Capital Group. My group provides all types of business funding, and we help businesses, both startup and existing businesses, build business credit so that they're able to have the working capital they need available to them when the time is right. About 80% of our customers have gone to a bank and been denied funding or financing of some type from a bank. And about 90% of the people who meet our very minimum requirements get some type of an offer for a loan or financing. So to go into one of the ways that we work with the businesses to make that happen, let's dig into the topic of building business credit and why that's important. So let me dive into my presentation. We'll share the screen here. If it decides to go. There we go. Sorry about that. Okay, business credit. According to the Bureau of Labor and Statistics, about 1 in 5 businesses fail in year one. The primary reason for that is insufficient capitalization. In years, by the third year of being in business, 50% of businesses fail. Again, insufficient capitalization is the reason for that. About 86% of businesses rely on credit or financing. And according to the Department of Revenue, less than 2% of businesses obtain loans from either the bank, a bank, or the SBA. So to start with, let's look at, okay, what is business credit? Because we get this question a lot when we're working with entrepreneurs and business owners. It's pretty simple. Business credit is credit in a business name that is linked to the business's EIN number or their tax ID number, not the owner's social security number. And so how does that differ from personal credit? Well, there are a lot of ways, and we'll dig into that here. So when, with your personal credit, if you go in to obtain a loan, some type of financing, or a credit card, the lenders are going to pull your personal credit report using your name, your address, and your social security number. Personal credit and your personal credit report shows the lender basic information that they have on file for someone with a similar name, address, and social security number. And notice I didn't say your name, address, and social security number, because they don't always know that the information that is on that report is actually yours. So we like to say that that file contains information regarding someone with your similar name, address, and SSN. And then the foundation of their lending decisions rely on a personal credit score that uses an algorithm that's based upon a number of factors. And those factors include pretty much 5 elements, depending upon the credit bureau, could be more than that, but the big 5 are, your credit mix, the length of your credit history, how much new credit you've obtained, your payment history, and how much you owed. And a couple of those elements mean, most specifically, the amounts that you owe on the available balances that you have in your history of making payments are the 2 most influential elements of that personal credit score. And the personal credit reporting agencies are listed here. Most people think that there's 3 and are familiar with Experian, Equifax, and TransUnion. There are actually—
And pardon me, your screen is not moving.
Interesting. Okay, let's try this again. I'm going to reshare here. Okay, does everybody see a FICO score?
Yep.
Yes.
Okay, here we go. Sorry. I don't know what's going on with the Zoom today. But anyway.
Have the presentation view checked, and it's showing us the next slide, whereas you should just be seeing that.
Okay.
Although we can't see it, you can't get, I mean, it's not.
It's lagging pretty good. Okay, we're seeing the personal credit reporting agencies here.
Yes.
Okay, great. All right, sorry. All right, I don't know why it's lagging like it is, but anyway, most people are familiar with Experian, Equifax, and TransUnion. Those are generally the companies that you'll get a report from if you go buy a car and finance it, you get a home mortgage. But there are 3 others that maintain credit files on individuals in the U.S. Innovis, ChexSystems, and LexisNexis Risk Solutions. And so it's important to understand that the others are out there. And then, so let's look at business credit. So when you go for business credit, lenders pull business credit profiles using the business name, the address, and the EIN instead of your social security number. And that report will show the lender information that is on file for the business name, address, and EIN number. The foundation of lending decisions for business credit rely on business credit scores that use various algorithms that try to predict the risk of delinquent payments, the risk of the business failing, and how the business ranks against other businesses. And that's a key difference, because with business credit, almost all of the score in the risk profile is focused on payment history. And that's quite different from personal credit. And so there are really 3 primary business credit reporting agencies of concern. Dun & Bradstreet is kind of the big one. Experian would be second on the list as far as importance if I were to rank them. And then you have Equifax. In all of the reports and the scores that you get from these 3 agencies or bureaus are very, very different. So we have Dun & Bradstreet has what they call a Paydex score, and that's a score of 0 to 100. Experian has what they call their IntelliScore Plus. That's a score of 1 to 100. Equifax has two primary products. The first is their business credit risk score. That ranges anywhere from 101 to 992. Their business failure score, which is a predictive index on how likely they feel that you are going to fail.
Hey,
And
Brian,
then-
on the scoring for the business credit, is lower better or higher better? How are they?
Higher is always better. And you'll see that here in a second. And then FICO is another company. They have another score that's out there that the banks rely very heavily on. And that could be a blend or a mix of information from your business credit profile and your personal credit profile. So when my group does business funding, we know where to go where they don't generally use this FICO product. So taking a look at them, when we scroll down the middle column, and you look at the overview for the scores, what you see is all of them look at late payments and they're trying to predict the likelihood of some kind of a delinquency within the next 12 months. And then these reports are used by different types of lenders. And it's key when you're going for business credit to understand what credit report or what credit score is going to be used in order to offer that credit, because that can hedge your bets in the direction of not only getting approved, but being approved at very high levels. And so digging into Dun & Bradstreet with their Paydex score, the image on the right it shows you, how they come up with, where you are really within the index. And your scores aren't, exactly 80 or exactly 90. You could have like an 83 or a 92 or something like that based upon your payment history. But this is the foundation for the Dun & Bradstreet Paydex score. You always want to try to be 80 or better when it comes to the Paydex score. Experian with their IntelliScore Plus, this is these numbers are based upon your payment history and the likelihood of going into some kind of a condition where you're going to make late payments. Oops. Equifax, it's pretty simple. Your credit risk score is, what's your payment history? Are you paying as agreed? Are you paying a little bit late? Or are you paying a lot late? And so that's really the different levels that you'll see with Equifax. Now, getting to the core of what we're here to talk about today is what are the benefits of business credit? And this, we work with hundreds and hundreds of companies throughout the course of a year. And I would say it's a very small percent, maybe 2 or 3% of people really understand the true benefits of business credit and why they should be focused on this as business owners. So first and foremost, it isn't tied to your personal credit profile. You don't use your social security number to obtain business credit. You can get business credit and have a very high business credit score, even if your personal credit score is horrible. We see people who have personal credit scores in the 4s and 500s, but they can be up in the range of an 85 or a 90 Paydex score with Dun & Bradstreet, or up in the top tiers of the Experian and Equifax, because when it comes to their business, they're paying the bills on time. And the business credit, your business credit reports to business credit reporting agencies, and they do not report against your social security number or your personal credit. And therefore, having open lines of credit or high utilization on your account balances, credit cards, or having large loans against the business doesn't tend to really impact your score for the business credit as long as you're paying your bills on time. But if you were to use personal credit and put a lot of business costs on personal credit cards or take out personal loans to fund the business, you tank your personal credit score. So business credit significantly reduces risk for owners because business owners don't expect to fail. But in reality, according to SBA, about 90% of businesses fail. And when that happens, if you're relying on business credit as opposed to personal guarantees or personal credit, there is no impact on your personal credit score. So that removes the personal liability that you might otherwise carry for business debts. And like I said, relying on business credit rather than personal credit reduces the risk of your personal credit score being negatively impacted. And to give you an example of that, we deal with a ton of business owners that are floating business expenses on personal credit cards, lines of credit, or they go out and they get secured or unsecured lines of or unsecured loans. Maybe they take out a mortgage or a second mortgage on their house to fund the business. Well, what that does, if you think back to the FICO score calculation, the amount of credit that you have and the amount of balances that you're carrying or the utilization rates on your credit cards has a major impact on your credit score. So while using personal credit might be doing good things for your business, in your personal life, when you go to get a mortgage, you go to, to buy a car and finance it, if your score is much lower because you're carrying those balances for your business, you're paying a lot higher interest rates. And in some cases, you just might not qualify. So keeping the two separate is a very good idea. And then business credit scoring is very different than personal credit scoring. As I said previously, it's based mostly upon whether the business pays its bills on time. It doesn't necessarily use those 5 or more factors that go into that FICO score or the other individualized score products that the Equifax, Experian, and TransUnion offer. And then one very key thing is a high business credit score can be obtained in a very, very short period of time. Because the business score depends upon payment of your bills, you can open just 2 or 3 business trade lines, make some purchases that are high enough to trigger that vendor to report to the business reporting agencies, and you pay those off. That's enough to establish your business credit profile. And it only takes 2 or 3 months to actually start to get that high score under your business EIN number. When you look at how long it takes to build a high personal credit score, it takes many years, because about 10% of that score factor is the length of time that you've had credit, the quality of the credit, the amount, and all of those things. Those factors don't necessarily come into play when it comes to your business credit score.
Hey, Brian, do you have any data as far as like what percentage of vendors do report?
We don't, but we offer a business credit building program for our clients. And what we do is there are really 4 different tiers of business credit that you can obtain. And we walk people through, first tier 1 would be to go out and open accounts with vendors who provide you with basic consumable type things. For example, Uline is a company, if you've heard of them. You can buy cleaning products, office products, and all kinds of things from Uline, but you can open a Uline account with a low credit limit the same day. So if I go online to Uline right now, I can open an account and I can pretty much guarantee I'm going to get a $300 line of credit. Now you have to purchase something from them that's more than $50 before it will actually trigger their reporting to the business credit bureaus. Now, some report to all three of those bureaus, some report only to Dun & Bradstreet, some report only to Equifax or Experian. So we know which vendors report to which bureaus, and we give you a list of vendors, and we ask you to pick 4 or 5 of them to start with and go out and open accounts with them. So we know that you're going to have accounts that report to all 3. And then some of them report they report after 30 days, and some don't report until 90 days. So we want a blend of that. So once you open those accounts, you wait the 30 days, chances are at least 2 or 3 of those 5 or more are going to have reported. And now you have your business credit profile established with the bureaus. Now you can go out and apply for the next tier. And that would be going to like retail credit, Target, Lowe's, Home Depot, places like that, where you might buy other business supplies and apply for credit there. And so there are a couple of other tiers, but once you open those accounts, if you do what we ask you to do on the vendors with the initial tier 1 vendors, you will be approved for the retail credit accounts that we send you to. Then once you do, you buy a couple things on those accounts, pay it off, they report to the credit bureaus. Now you're ready for the next tier and then the next tier. And so I don't have, statistics, but it's not uncommon for us to work with a business, either new or existing, for anywhere from 6 to 9 months and get them to the point where they have anywhere from $80,000 to $100,000 worth of available credit to them. Now think about that when it comes to a startup business or, a small business. That can be a total game changer, having that type of available credit.
So you have a list, or you would make recommendations to your client where to go to open credit where it is going to be reported. Because if they may be dealing with a smaller local entity, that entity or business may not be reporting, correct?
Chances are a small local business is not reporting. Correct. Yes, because it's onerous, and there are some legalities to how they have to report and all of that stuff. It's not something a smaller local business is going to want to dip their toe into. It's just onerous and it's kind of expensive. So yes, we give you guidance on where to go. And then like with our program, we can get you pretty much where you want to be in a 6 to 9 month time period if you do what we ask you to do. But we work with you for a total of 5 years. So if you want to continue over the course of those 5 years to build more and more and more credit over time, then you have our consultants available for that time period with our program. So this isn't something that you just do and it's done. You can actually, it's not uncommon for a very small business. Even, I've seen online businesses, people who do like lead generation and other things, be able to, build their business credit to the point where they have a couple $1 million worth of available credit to them. And that's a lot of credit for, for kind of a single person entity, but it's possible. And so when you take a focused approach to it, it can do really good things for your business.
Brian, how are the funds received by the business?
The funds are received. So if you open an account, let's just go back to Uline. I open an account with Uline. I buy from their online catalog, which has thousands and thousands of things in it, and probably things you need for your business or home. Then once you make the purchase on credit, then you just go back on your online account and make the payment. So you're opening that line of credit with the business, and you're making your payment to that business, just like you'd be paying an invoice to a business.
Forgive me, that's not what I'm asking. What I'm asking is when you reach the point where the business qualifies for 80 to 100,000, 6 to 9 months from now, how are those funds received by the business?
Okay, well, that could be in the form of available credit balances on credit cards and things like that. That once you build your business credit to where you have a good, IntelliScore with Experian, or a good Paydex score with Dun and Bradstreet, now you're in the zone where you can actually go to a business lender or potentially a bank. Now, a large bank, most large banks aren't going to do anything without you attaching your own personal social security number and personal guarantee to it. But a lot of local banks and smaller regional banks will do a business loan only based upon your business credit profile. And so we're building your available credit with credit accounts with vendors, with credit cards, so that you don't necessarily have to go to the bank. If you're a retail store and you're going into the Christmas season and you have to significantly increase your level of inventory to handle, the Christmas buying season, you might want to just float that on a credit card rather than having to go through the process of getting a loan. If you want to go to a loan and you need a loan and you need the cash, then if you come to a business lender or a business loan broker like us, then we know where to go, or we know how to get you the cash that you need based only on that business credit. Like for me, when I have businesses that have a robust business credit profile in a decent score, I can make a business lending decision within 24 hours. Sometimes we can make the decision in less than an hour, and we can oftentimes fund the business loan the same day or within 24 hours. And I don't need a lot. I need your tax ID number and 3 months of bank statements for your business. That's it. And based upon that alone, we can make lending decisions anywhere from $5,000 all the way up to, we've had businesses that, have come to us and we've gotten loans funded in excess of $1 million based on very little information. So the business credit lending process is so different from the personal and consumer lending process because there are different laws that a lender has to adhere to when it comes to consumer lending. And with on the business side of things, it's just a whole different animal. And we have different ways of digging into the business and looking at what's going on there. And so, like I said, that enables us to be very quick in being able to make decisions. And it also enables you as a business to build that high credit score very quickly. And so these are the things that most business owners don't understand about business credit. They just think, oh, you know what, I just have enough personal credit, or I'm not going to need that. But if you get into trouble and you just need a little bit of credit to get you through a tough period, COVID's a great example of that. Or if you're growing rapidly and you need cash flow to buy equipment, to float payroll or whatever, because you have a lag in payment terms from a client or a customer, then it's great to have the credit available to enable you to do that. So, another big benefit is that business credit increases the valuation of your company. This is actually, there are a lot of different valuation methodologies that a business valuator will look at. And in a number of those models, the amount of available credit that's there for the business to carry them through rough times or through different phases of growth is a big factor in those valuation scores or valuation amounts. So those high amounts of available credit provide a fantastic safety net, and they reduce risk for the business. If you have a temporary slowdown in business, or something happens with your health and you can't operate the business, credit can pull you through that to the point that you're back in action. A high credit score and a high amount of available credit demonstrates effective financial management of the business. The available business credit protects you as an owner from risks associated with having to float business expenses using your personal credit. And available business credit can reduce the need for outside funding. We have a lot of businesses that we work with that use cash advance loans and things like that to get them through periodic seasons throughout the year. Christmas is a big example of that. Well, why do you want to pay interest to a lender if you have a credit card that has a 2.99% interest rate on it, when you might be able to float that on a credit card and just make the payments until you get through that season and you realize the cash to be able to pay off the balance. There are a lot of options. We have businesses who will put vehicles on credit cards because they have low interest rates on their credit cards, and it beats the interest rates that they can get from a lender. And then business credit with a lot of available balances and high credit scores demonstrates that the business is established, that it pays the bills, and it appears to be financially successful. And that's important, because with business credit, anybody can pull your credit score. They do not need your permission. I can go online right now and I can pull the business credit profile for any business. I don't even need to know their tax ID number. And when you apply for any kind of credit for your business, even if you're applying for a personal loan that will be used by the business and you disclose that, the lender is going to check your business credit profile, regardless of whether they tell you that they're going to do it or not. They do not have to tell you by law, because you're not operating as a consumer, you're operating as a business. And that's key. So that focusing on this stuff, if people pull your business credit, it demonstrates that you're financially viable business. And then, like I just said, it is used for lending decisions, regardless of whether or not they tell you. And not having business credit established can get you declined for financing before you even get into the process. There are about 24 different criteria that banks and many lenders look at to judge whether or not they'll even look at your financial statements or your bank statements or anything like that. And more today, lenders are using what they call automated underwriting. Your information gets plugged into a computer, they push a button, and it's the computer system or the software system that makes that lending decision. It will spit back a denial and approval, and usually if there's an approval, it's a conditional approval based upon certain things that need verified or certain documents that need to be reviewed. But with more and more lenders, particularly banks, using automated underwriting in not even going through a manual review of all of your information, if you don't have all your ducks in a row with your business credit profile and have put some focused attention on building your scores, then that can kick you out of the queue, and you get a denial without willingness to ever do the manual review of your information. And then, business credit offers competitive advantage too, because it's easier to grow a business when you have access to capital. Having that established credit enables access to capital oftentimes when other businesses can't get it, or they can't get it fast enough to make it useful to them. If you work on building your credit profile, you can have just about instant access. When I get businesses that come to me and they've got a good profile, they have, a Dun & Bradstreet profile, they have their Equifax and Experience, and they've got good scores, I can fund them same day in most cases. And that's critical. If you call me this morning and say you need 50 grand because you have to buy a new piece of equipment and all your scores are good, I can have that money in your account this afternoon generally. So it makes a huge difference. And then it allows you to, business credit can actually allow you to leverage your personal capital differently. Imagine you have a couple $100,000 in available business credit, but you need more for some reason. You could, we don't recommend that you do it, you could actually also leverage personal credit. And I've seen this happen in a number of instances when, owners of a business are looking to buy a building and they have to come up with X amount of capital out of pocket. And this is very true today in the crazy real estate market we're in, where a lot of times sellers are, they don't want anything but a cash offer, and they want you to close in anywhere from 2 weeks to 30 days. If you have to go through the traditional lending processes, now a lot of times you're looking at a 60 to 90 day close from a bank or traditional mortgage lender. If you have available business credit that you can leverage, you can get a pretty sizable loan. And if it doesn't quite give you what you need for something like a building or a large equipment purchase, then you can leverage personal credit. I work with a franchise company that necessitates the franchise owner to buy a truck, a specialized truck that cost about $165,000. And as a startup business, a lot of their business owners, franchise owners, don't have the available business credit coming out of the gates to afford or get approval for such a large loan. So in those cases, they might opt to use a mix of business and personal credit. And after we work with them to build their credit profile, then refinance that truck using only business credit to get it out of their off their personal credit report. So there are some strategies that you can use. And business credit, where let's say, whatever your level of available personal credit is, generally, we can get you to the point where you have at least 10 times that available under your business name. And so just a quick view into how we do this. Like I said, we have a prescribed path that we walk you down in a phased approach based upon, building those scores and applying for credit at different levels in different types of lenders and vendors. So this is a process that's been used not just by us, but by a lot of different people, and it's a very prescribed process that works. It's very effective, and it can get just about any business where they need to be. And so with that, I'll open it up if there are any questions.
In the beginning, you showed us the 3 credit reporting companies that we recognize, and the other 3 that, I've heard of Dun & Bradstreet, but the other ones I haven't. Is there a time when one of them might say yes and the others will say no?
Yeah. Yes, they all use different flavors of scores.
Okay.
So when you're talking about like the personal credit reporting bureaus, the additional, even when you're looking at, Equifax versus TransUnion, a car dealer, when they get you a car loan, they'll pull all three, and they'll take your loan to the auto financing company that uses the credit reporting bureau that has your best score, so they can get you the best rate. Innovis, they provide information to the big three credit bureaus. And so if you're doing credit repair and you have your information wiped off of your Equifax, Experian, or TransUnion profiles, all that information that you got removed from those credit reports that was either not yours or erroneous could still live in your Innovis report. And then, check systems is one of those additional three. Every time you open a bank account, your bank is going to check systems to make sure that you don't have outstanding balances to other banks, and that they can safely open an account and know that you're not going to run into a situation where you have a negative balance and then just go to a different bank. And then LexisNexis provides all kinds of additional information, primarily to other credit reporting bureaus and to businesses who subscribe to their services. But when you look at the business credit reporting bureaus, then it's very frequent that you might get one that will say yes while the others will say no, because their scores are very different, and they tell a lender different things about your business. So somebody might just look at Dun & Bradstreet, and your basic Dun & Bradstreet Paydex score, that's basically just a history of how well you pay your off your credit accounts on a monthly basis. It gives very little more than that, but a lot of businesses rely just on that, and you can get a definite yes. Well, Experian and Equifax might dig a little bit deeper into other factors, where Dun & Bradstreet's a yes because you're paying your bills on time. Experian and Equifax might be a no because they do look at some other nuances. That's why you want to go, if you're looking for some kind of business financing, you really want to work with a business loan broker or a direct business lender, because we know what to look at. I work with over 100 different lenders, and the list is growing on a weekly basis. I know exactly where to go, depending upon your business's profile and your business's situation, and in the reason that you need the loan or the financing. It's just, we know exactly where to go, who has the best terms, and who does what kind of a lending. Oftentimes, business lenders only do very specific types of lending. They might only give cash advances based upon your monthly volume of credit card processing transactions. So if you're looking for a cash advance, I know where to go. But that's the art of this business, is understanding what their requirements are and what they look at, and how to position your business with your score profiles in order to qualify for the maximum amounts and qualify to the most number of different lenders that are out there.
Brian,
Yes.
as a mortgage professional, I have access to my client's credit report, 3-bureau report, and I regularly advise them on what they need to do to qualify for a mortgage. Do you have access to Dun & Bradstreet, Experian, and Equifax business credit reports so you can advise your client how much they qualify for or what they have to do to fix it in order to qualify?
We do. Yeah, what we like to do is we like to work with them before they actually need financing, so that they can qualify for the best rates, terms, and the highest amounts. But if they come to us and they need financing now, we'll pull those reports, we'll look at them, and we will give them guidance on what they need to do in order to better position themselves. So yes, absolutely. We can do business credit repair, but again, we like to work with businesses before they actually need that line of credit or that financing or whatever it is, because it's just easier. everything isn't, a mad rush. And, it's a better end result when we have the time to get you repositioned where you need to be. And we don't need, like on the personal side, like the personal mortgage side, because I was for a number of years a licensed mortgage loan originator. So I understand, the requirements there. You actually have to have their permission to pull that credit. I could go out and I could pull credit on any one of your businesses right now. I don't need any permission to do it because those consumer finance laws do not apply to your business. And so I can go online to Dun & Bradstreet, Experian, or Equifax, pay a fee, and pull a report on any business I want right now. So yes, it's easy for us to get access to the reports. We actually subscribe to those services.
Brian, take a couple of minutes and speak about the initial introduction to your company. If somebody needs the kind of expertise that you provide, is there a pre-meeting? Is there an introductory meeting? When do the fees start?
Okay.
And this way, somebody calls you and says, I think we're going to need your company. How do you get started? So what's the initial the thrust of the introduction and all of that? Thanks.
Okay, very good question, Tom. Thanks. Yeah, it's there are no fees at all to start working with us. Any relationship, whether it relates to some kind of business funding or it relates to business credit, start with a free, no obligation consultation. If you're looking for some kind of business funding, we pair you with a business funding consultant who works with you to understand your needs and then give you guidance, and then, we go through the initial underwriting process and then we present you to the best options out there in the marketplace. When we're talking about business credit, those relationships start with a consultation too. We sit down with you, now in the era of COVID, we'll either sit down or we'll hop on a Zoom call. We'll have a chat with you about what your current situation is, what your business goals are, what you need, and then we devise a plan on how we're going to get there. Now with us, because we assign you with a consultant who works and gives you guidance and on how to actually go through the process of building that business credit. That's a somewhat time-consuming thing. So there are fees associated with that particular service, but with on top of building that business credit, there are a lot of additional things that we offer, and our fee for that service gives you access to that consultant for 5 years in total. So it's extremely inexpensive given what you get for the service. But there's never a fee to pick up the phone or hop online and book a meeting with us and have a consultation.
Excellent. And also excellent presentation. We really appreciate you taking the time today and showing us your PowerPoint and explaining the importance of building business credit. So for this Tuesday, that's going to be it for us on YouTube, but we're going to stick around for a couple more minutes and I have a couple of more questions for him. But for our YouTubers out there, thanks so much for watching until the end. Brian thanks you. I thank you. Chris thanks you. Ray Antonelli and the rest of the crew here. Thanks so much. We'll see you next Tuesday morning. Thank you.
Thanks, Tom.
Adios.